Hello guys, welcome back to another exciting moment with Rally Tap Investing 3.0 SMC Masterclass. Now, are you a trader out there and you have a small trading account and you wish to flip that small trading account? You are in the right place, because right here and now, I'm going to show you step by step on how to achieve that effortlessly. The only thing is that you need to stick with me to the end of this video. You don't want to click away from this video halfway, because if you do and you now want to use this strategy to want to flip your account, you might end up completely blowing off that account. And I'm sure it's not something that you would like to do. Now, I see a lot of traders in the market. They said they want to flip their account, and you find them taking positions, multiple positions in the market randomly. Just in one area, they are taking random positions in the market. Now, if you do this, it is a recipe to blowing off your account, and I'm sure it's not something you would like to do. Okay? Now, so in this video, I'm going to take you through step by step, so you need to pay attention, because there are some basic requirements that you need before you can flip your account. The first thing is this: you must understand how to map the structures of the market. If you don't understand how to map structures in the market, we have loads of videos concerning market structure that you can go back to our playlist and watch before you come to this one. If you have been following me for a while now, you will know that I've been talking about structure mapping a lot. So in this case, we want to map the most recent structures. Now take a look at this high. For this high to be confirmed, it needs inducement. And where is the inducement here, guys? Well, inducement is the most current structure low in a bullish structure. That becomes your inducement. So this is your inducement in the market. So high is confirmed. Now, but where is the higher low before this higher high? Let's see it. Now, if you say this is a higher low before this higher high, your higher low must be confirmed when it sponsors the move up to take out major structure high. This is supposed to be your major structure high because it took out inducement here. But everything wicked. All right? No candle closed above this high. Everything wick. So we cannot actually use this as our higher low. Or this one here, I think this is the lowest low. We can't use this as our higher low. So now, where is your higher low? Because we need that. Now, we have to go backward and look for our higher low. Now, as you can see here, you have a high here. Why is this high a valid high? Because it took out inducement here. And once inducement is taken, you know that your high or low is confirmed. So therefore, this high is confirmed. So this is our higher low in the market, because after that high is confirmed, price travel back up to take out this major structure high, initially with a candle wick, but eventually closed above it, and that becomes your boss break of structure. So now we have our low in place, and now we have our high in place. So this becomes your trading range. So the second thing you need to do after mapping your structure is to determine your trading range. And how do you determine your trading range? You determine your trading range by identifying your swing high and your swing low. And as you can see, that has happened here. This is your swing low and this is your swing high. So the whole of this area is your trading range. So we are still bullish. Now, if you have that idea that we are bullish, then the next question to ask is, how do we capitalize on this structure now to take trades from the market? Immediately price took out this inducement. Where are your areas of interest that you want to take price from? Well, as you can see, everything here is mitigated. Everything is mitigated here. So now, where is the next area of interest that you can look at? Well, the next area of interest that we can look at is this low here. You have unmitigated order flow right here. So we are expecting price to come and tap into this one, okay, before we now start going higher again, because we are bullish. Now, but how do you take advantage of that to take price lower? Or are you going to sit on your hands to watch price coming down until it gets to this zone? I don't think it is the right way to trade. So you want to take advantage of this price coming down after taking out inducement. Okay, and how do you do that? You want to wait for price to take out inducement. If it takes out inducement and gives you TNCP, you can go short from there, or tap on any area of interest, valid area of interest, you go short. So you will continue this process until you get to this zone. So that is how to trade the market. Now, so in doing that, let's begin to see, after taking out this inducement, where do we have our low here? Is this low valid? It will only be valid if it took out this inducement here. So it didn't take out that inducement, so it cannot be valid. And before you know it, this low went up and printed this high and came back down to take out this low and printed a new low. So for this new low to be confirmed, it needs inducement. And where is the inducement here? Well, inducement will be here. And as you can see, that inducement was taken out to confirm this low. Now, I want to say something here. Please remember that this is minor structures. This is internal structures. Your major structure is still here. I hope you understand. This is your major structure high, and this is your major structure low. Okay, so all of these are internal structures. I hope you understand. So it took out that inducement there to confirm this low. It wicked above this inducement, and then price dropped. When price dropped, it came to take out this very low here. Please follow me and you will understand what I mean. It took out this low here, and that is known as internal break of structure. Please take note of that. That is not your major break of structure. It's internal break of structure or minor break of structure. And after that, look, price came down. For this one to be confirmed as a low, it needs inducement. And where is the inducement here? This becomes your inducement in the market, guys. Simple. And once inducement is taken, this your low will be confirmed. So if inducement is taken, where is your area of interest here? Look at your area of interest. This will become your high probability area of interest. Okay, so remember, this is still your high, and then you have internal structure low here. So your trading range is between here and here. But if you look at everything here is mitigated except this now. Okay, so we want to play price and see what happens from there. Okay, as you can see, price has tapped into our area of interest, which is the 1H time frame. I want to take price, this one out, so we can understand. The first time price tapped into it is this one. So we want to go to the 5M, because I'm using the 1H as my higher time frame here. You can replicate this on any time frame. It's as simple as that. So now we want to go to the lower time frame. If we find any reason to go short from here, where will be our target? Well, our target will be here. This is the target we want to see, because this is internal structure low here. Look at this. This your low is already confirmed when price took out this inducement. So this is your internal structure low. And now this is where we want to put place our TP. So we now can go to the 5M and see how we can walk over this trade. Now, I don't want to take you through refining your zone. We have talked about zone refinement in our previous video, so you can go back to it and watch it. And if you don't understand, please let me know so that I can make a video for you. Now, so price has tapped into this higher time frame area of interest. When price tapped into this higher time frame area of interest, the first thing you need is your chalk. And where is your chalk here? Now, remember, the first low in the case of this bullish structure going higher is not inducement. Why? Because price has tapped into your higher time frame area of interest. This now is chalk. It's not inducement. Please take note of that, because I see a lot of guys marking this as their inducement. It's not inducement. This is chalk, because when price taps into higher time frame area of interest, your first low or high, depending on the direction of the market, is your chalk. Now, so change of character. Now, after change of character, what do you want to wait for? Do you want to wait for inducement or what? No, we cannot wait for inducement. Why? Because liquidity has already been taken. Where was it taken? Look at it. this high was taken by this candle wick. So liquidity has already been taken. So the smart money does not need to wait for, create any inducement again. So, but if there is inducement, no problems. You can still take it directly. Okay. So now, once price, let's play price. Let it take out that chalk. That chalk is here to be taken out, and now it creates a new structure. This is a new high, and then we need chalk, and so our chalk can be transferred from here to this point. Okay, so we are waiting for that chalk to be taken out before we do anything. Okay, so chalk now has been taken out. Now, do you need inducement here? Yes, of course. Why? Because this high, all right, this candle closed above this previous candle high. You know, after this high is this pullback, and now this candle closed above that high. So you need inducement. So you cannot take your trade directly like that. You need inducement. And where is the inducement here? Well, as it is now, when price broke structure, your inducement is here. Your inducement will be here. Okay, let's wait and see what happens. Okay, so a new inducement has been created in the market. So our inducement can be transferred from here to this point. Now, we want to wait for price to come and take out this low. If it takes out this low, then we may have a reason to go short. Okay, so it's like it has taken out this low here now. Let's be sure of that. No, it's here to take out that low. So we continue. Okay, so low has been taken out. Remember, this is internal structure, break of structure. So if price takes out that inducement, then we'll be ready to go short. And where is your area of interest here? Is there any area of interest that you can look at? Well, everything here is mitigated. Everything is mitigated. So we don't have any area of interest there. So let's continue to play price. If it takes out this inducement and gives us TNCP, then we'll be glad to go short from there. So we continue. Okay, so it has taken out that inducement now. Now, where is our area of interest? Our area of interest is here right now. This one. Do we need inducement before we can take this trade from here? Well, you don't need inducement. So you can take your trade directly from there because that's our order flow. Now, but if you want to refine this order flow, then you can refine it to this OB. If this order flow is too large, you can now refine it to this OB. I hope you understand that you still need confirmation. So that becomes a refinement OB. So let's continue. If price taps into this position, we want to wait to confirm our entry. And the only way you can confirm your entry is through TNCP. Please take note of that. TNCP. Now, let's continue. Okay. So now, price has created inducement here. Okay, so it took out that inducement, as you can see. It took out that inducement and tapped into this, our area of interest. If you are aggressive, you can take your trade directly from there. So that's our first trade. So we can frame it to go short. Just put your stop loss just above. And where do you target? You are going to be targeting that low. But first of all, when price takes out this low, you can move your stop loss to break even. But your actual target will be here. When it takes out this low, please move your stop loss to break even. And after that, let your trade to run. Till where? Where is that our low? This one. Till this low here, guys. Very simple. Very, very simple. And therefore, look at me. Let me show you something here. For me, as price taps into this, you can enter directly like I said. Now, if you want to add your position to this, now you can do something like this. We've gone too far here. Let me just show you something here. Now, this is your TNCP. This is your TNCP that you need to take advantage of. Look at this candle. Tap into this area of interest. It's a candle wick, okay? And the next candle close below that candle. This is your TNCP, so you can mark it out and take your position from there. You can add to your position from there. So we are adding to this position here, and your stop loss just above. Okay, where is your stop loss? Just above. Okay, so now your TP also, once it takes out this low, move your stop loss to break even or let it run, because let it run to this low here, guys. This is our ultimate target. Okay, so let's continue to advance price. Now, once price takes out this low again, once it takes out this low, we can add to these two positions. So we continue. Okay, it has taken out this low now and close below it. So we can add a position to this. How do we do that? Well, take a look at this. This is your order flow here. Do you need inducement or not? You don't need inducement, guys. Inducement has already been taken here, so you don't need further inducement. So all you need is your order flow. And where is your order flow here? This one, guys. This will become your order flow in the market. So we can add to this position here. Remember, it's only one position that is activated. All the other one is not activated. So just put your stop loss above, and then your take profit the same. Take profit the same. Okay, so let's continue to play price. We are in, if it goes our way, we'll be in 3 trades, but let's see. Okay, price has already tapped into one of our position. Has it? Yes, it has tapped into this position, but this middle position has not been activated. This has been activated. Look at it here. It has been activated here. Can you see that? So let's see whether the second position will be activated as well. Okay, has it activated the second position? No, the second position is not activated. Nearly, but it was not activated. Okay, but let's continue to see. It may activate it, we don't know. Okay, so it's activated. All the 3 positions now are now activated. So we are in 3 trades now. If it goes our way, then imagine how much you can make. Now again, if price takes out this low, we want to add to position to this position. All right, this is how to stack your trades. You don't just stack trades anyhow. You don't just take multiple positions in the market randomly. No, it has to follow logic and structure. Okay, so now if price breaks this low here, we want to see whether we can enter another position. Look, price tap into this our area of interest here and gave us TNCP. This is a clear TNCP in the market, guys. Remember, this is lower time frame. Until price takes out this low, we are still stacking position within that trading range that we identify on the 1H time frame. Okay, so now this is your TNCP, clear TNCP, very neat TNCP. Okay, so if price taps into this TNCP, you can go short from there directly. But I like to wait for confirmation. So place your stop loss just above, and then your TP right there again. Right here again. We don't know what is going to happen in the market, but we trade what we see. All right, so that's another position. If it is activated, we'll be in 4 trades. All right, so I will want to wait for confirmation here. If price comes back here and gives us confirmation of TNCP, I will take another position. I will add another position there. So let's continue. Okay, we have been activated. We've gone too far. Let me take price out of here. We've gone too far. This is where we have been activated. This one. So as you can see, we have been activated into the market. Price has tapped into this. And now, here is the confirmation I'm talking about. This is your TNCP. This is your TNCP. Okay, so we can take another position there. I'm not asking you to take all this position. I'm just showing you how to flip your account. Okay, so just give a buffer to your stop loss and target the same low, just the same low, just the same low. So how many trades? 1, 2, 3, 4, I think 5 trades. We're in 5 trades now. That is, if no, we're in 4 trades because this one is already activated, but this one is yet to be activated. So let's continue. We're in 4 trades. Okay, so this also has been activated, guys. It has been activated. So we're in 5 trades now. So let's now continue to advance price and see whether it will go our way. Boom. Take profit smashed. Now think about it. Let's look at it one by one. This one gave us 11.97 R. Please calculate it. 11.97 R. The second trade gave us 5.47 R. That's about 17 R now. This one gave us 4.24 R. That's about 21 R. And this one gave us 5.43 R. That's about 26 R. This one gave us 5 R. That's about 31% of your account, guys. Just trading a particular range. Let's get back to that one each. Let me show you the range. Just trading a particular range. Look at it. Just trading a particular range from this high, this point, to this low. You made 30, over 30 hours. Over 30 hours. Think about it, guys. This is the right way for you to stack positions in the market and flip your trading account. Okay? Just within this very range. You need to think about it, guys. So this is the way for you to flip your small account. Watch this video multiple times so you will see the logic and structure that were applied to get over 30 R. Do not go about stacking positions in the market randomly. It will blow your account. All right, guys. I see you in our next educational video.